Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hello everyone, welcome back to another episode of Broker Daily Uncut. Your host Jack Campbell here, tuning in a chilly Monday morning. As per usual, my co-host Phil Tarrant, Alex Whitlock. Gentlemen, how are we doing today?
Yeah, good, thanks, Jack. It is indeed chilly.
It is chilly, and it's on this rate day eve. We have the RBA call tomorrow.
Rate day eve, I like that.
Yeah, we're going to start coining that term.
Are you going to put your stocking out?
Yeah, I think I might. Everyone's very excited. All the rumblings going on. Any last-minute predictions coming in from you guys?
Oh, it's not my position to predict. All I'm going to do is regurgitate what I've read and pick the ones that I like the most. But I think everyone is, I think, in the same line that there's going to be a rate cut. And it's what the market needs, Phil. Don't you agree?
It needs something, yeah. What Australia has, we spoke about it the other week, a bit more continuity now. We know who's in government. Things should be stabilised a little bit. I think we now know who the leader of the opposition is going to be. We know who the leader of the Greens is. We know who the leader of the Nationals Party is. So largely everything is squared away. There's going to be some scuttlebutt and ongoing stuff, but we have stability now, you know. So we've got some period ahead of us with continuity. And I think everyone will be looking towards stimulating the economy and getting things sort of shifting the gear with a rate cut. So it's going to happen, even though I saw job data come out, was it last week or somewhere or other, you know, and everything. I think we're going to go into a period of steady as she goes. You know, nothing really to see here. Just everyone's just going to get on the treadmill and trudge it out for the next 2 years, I reckon. And through that period, with a view towards continuity of government and continuity of everything else and getting all these things in place, you know, a rate cut here and there as well, just to stimulate the Aussie punter to spend a few more bucks. So that's where we're at.
Well, exactly right. I mean, we will be across the decision when it comes in, but I think more importantly...
Have you already written your news flash? Is it ready to go? You just got to press send?
We got locked and loaded. We got a few in there. We got some comments in, so...
Wow. You've already got comments for it and everyone's saying there's going to be a cut?
Everyone's pretty much on the same side, but... Yeah, we never know.
Everyone at 25 base point. Anyone going crazy out there at 50? I know there was getting numbers bandied around probably a couple weeks ago that we could get a 50 basis points cut, but I don't think that's going to happen.
Yeah, I think that's stalled a bit now. They were saying 50 basis points. Some are saying 35.
Yeah.
Bit out there, but yeah.
Well, it's still a weird number though, isn't it? It's not divisible by 0.25. So maybe they go 35 and just make things easier for you journos who aren't very good with your numbers. You're screwing them up all the time and. Yeah, maybe. You calling it, are you? 35 basis point cut?
I'm not calling anything. I got no idea. I just report on what I see.
But this is the point, right? You know, everyone's an armchair economist and will have a view of it. And you go, okay, whatever, 25 basis points, 35 basis points, 50 basis points, whatever the number is. It's okay, well, what do you do about it is the key thing. That's what most brokers will be thinking, I would imagine. Yeah,
well, I imagine, you know, if the cuts do come, it's going to be a busy time for brokers, whether that's refinancing, whether that's first home buyers coming in. You know, we talk to a lot of people in and around the industry, and the thing for the regular punter, as you said before, they look to the RBA call as a decision whether they should, you know, enter a loan. Whether or not it makes a difference, it doesn't make that much of a difference, but that's the sort of thing they look for.
It's a mentality. It's like everyone's lining up right now at the start line and they're waiting for the starter pistol to fire, right? And it's just that the bang of that gun is just what triggers a positive mindset of people and they'll start taking action. So I reckon mortgage brokers should be, you know, engaged and connected now.
The biggest thing is not just communicating that there has been a cut. I think from a broker perspective, if I were running my communications, I would be saying rates have changed. What does it mean? If you've got an existing loan, you know, your repayments have changed by this. Hey, you know, you may want to look at, I'd actually give some context to it, because you want to really, just saying rates have gone down or rates have gone up or rates stayed the same doesn't really connect. I think there's an opportunity for brokers to connect with their, you know, with their customers and with those that maybe have inquired and didn't decide to go ahead. You have an opportunity to engage the marketplace, give some context about what it could mean in terms of finance, maybe give some a bit of a bit of a viewpoint around how it might impact the property market, and then convert it into how it affects them. I think that's the way to start to stimulate, because you want inquiry, whether it's from your existing loan book or from customers that are going to look to do something in the future or
Yeah,
prospective.
definitely. I think this is one of the busiest times of the year at the moment for brokers, as far as I can see, because you got the rate cut coming, but also leading up to end of financial year. And those who tune into the Finance Specialist podcast with Trent Carter and I, as he was saying, SMEs especially this time of year gearing up, looking for the year ahead, what to spend their money on, and looking to square up things before the end of financial year. So very busy time for brokers at the moment. They'll be feeling the strain, I'm sure. And yeah, a lot of busy times for first home buyers and stuff as well, looking then to the market as the new governments come in and the new incentives are being put forward.
Off 1 July, does it?
Does it? 1 July?
Yeah.
Yeah, so...
all the first home buyer stuff. But already, you see there's a lot of commentary coming out from different quarters already saying it's just going to put such a positive uplift on prices that, I think Louis Christopher, for example, around that, who's at SQM, I don't want to butcher his commentary, but or his numbers, but he's predicting a 10% jump in prices as a result. Within that,
what do you mean in prices?
In that first home buyer range.
What time frame has he actually nailed down? They're going to go up by 10%.
Pretty quickly.
Right? What, in 10 years?
Pretty
in
quickly.
1 year?
Yeah. Now maybe have a look at the numbers, do a story on it, but it's going to be certainly a positive, sharp uplift in prices is the prediction.
It's interesting because Jack, sort of similar to you, my daughter sort of thinking about buying, and again as a first time buyer looking to capitalize on the incentives for first time buyers, but her serviceability is not great for being a buyer. So you end up then going, okay, well, then you go in the investment market and you don't worry about the government incentives, but then you can buy somewhere cheaper in another market than you would do buying a flat or a unit in Sydney, and you look around and the price that you can buy pretty cheap still. I mean, I look at Melbourne. I bought, I don't know, 9 months ago, 6 months ago there. I bought a 4-bedroom place. Look, it's not in Melbourne CBD. You're out near the airport, but it was, it was under $700,000 for a house built in 2017, new. 4 bedrooms, good accommodation. It's got a really, really good rental yield. So I can't see places like that. And I'm sure there's lots of other suburbs in lots of other cities where there is real opportunities to buy. And so, if I look at what my daughter would get for that kind of money in Sydney, she's not going to get much. You get a 1-bedroom unit, you go down to Melbourne and you get a 4-bedroom brand new house it's a smallish block. I don't know, it was a 400 square meter block, but it's a good investment.
Yeah, I think you're kidding yourself if you're in your 20s and thinking you're going to get a big house in the city. Just not viable. So yeah, I'm looking out west. And yeah, it's something with you want a bit of land, I think.
You can still buy Phil's flat in Mount Druitt if you want to.
I could buy in the Druitt. Still going with that? Are you still trying to
going off? Yeah, slowly but surely.
Anyone?
But even that, Phil, just to the point, if you're an investor, that 2-bedder it's mid 300s, was it, or is it around about that?
Yeah, about 300 and 330, 340.
You know what I mean? And that's very affordable, whether you're buying it as an investment or whether you're buying it for somewhere to live. So, look, I think where we're going with this, I think that a rate cut brings confidence and a rate cut brings activity, and people go, it's almost that psychological bit of a Dumbo feather type thing where you go, I'm going to make my move now. Nothing really changes in terms of a 25 basis point cut in terms of the cost to kind of fund a property or serviceability. But I think it's that psychological, it's time to go. So I think there will be a bump. I think there'll be more competition for the lower end of the market. Look, will it mean a 10% jump? Look, and where, kind of nationwide, in Sydney, in one particular Sydney?
This is when I would point to the Fast 50 report, the Smart Property Investment. I'm going to do a blatant plug here. Where to put your money today for the best capital growth in 2026.
Yeah, but say it's blatant. You're not plugging anything other than a free report, which does highlight growth suburbs, and it has done for a long, long time.
Yeah. Go and check it out.
Any standouts that you can?
Can't tell you. Got to go and download it.
All right.
Yeah.
Well, we'll put
but you'd be surprised, and we've been doing it for a number of years, and already the shifting sands of where to put your money today for the best capital growth in 2026. You know, 2 reports ago, obviously, even last year was very WA orientated. You know, and Brizzy, things are changing. You know, you see the emergence of some other suburbs in other states are coming to the fore, and that's purely just market dynamics and the way it works. So, if you want to go and have a look at affordability, if you're an investor, you know, there's a lot of places in Australia you can invest at pretty reasonable budgets, which has the propensity or the indicators to give you solid capital growth into the future.
Yeah, definitely, and important for brokers. It's good to have a bit of knowledge on the property market because people are coming to you for your knowledge.
Well, one of the biggest things, sorry, Jack, before we go to a break, is a lot of people are going to be coming to mortgage brokers. A lot of younger Australians saying, "I've got a deposit. Well, I've got part of a deposit. Now I want to subscribe into these new government incentives in order to enter the housing market earlier." So it might not necessarily be the right decision for a lot of younger Australians to buy a home to live in versus buying an investment property. Because if you're a younger Australian in your 20s, you might not want to be tied down to a principal place of residence. It might not be an ideal, you know, wealth creating tool for you at this period of time. So I think the smart money is for brokers to be able to inform and educate younger Australian borrowers to just not think one-dimensional, and that is, I need to buy a home to live in it because I'm going to get some government incentives. Because a lot of the properties that you'll find potentially, and you see a lot of criticisms around this, people entering the market in less than ideal suburbs. Now, it might be nice to buy a home to live in. However, if for whatever reason you need to sell that home, you might find yourself in negative equity, and you see it now. And there's a lot of stories around at the moment with younger Australians buying, you know, apartments in new developments who aren't able to get out of that market. They can't afford. They find out they can't afford the mortgages, for whatever reason, and they want to try and sell down that real estate. It's not worth what they paid for it. So, you know, just because there's an incentive and a stimulus there doesn't necessarily mean it's a good investment decision.
Yeah, definitely.
So good brokers should be able to have these discussions within the realms of what they should be chatting about. You know, they're not in the business of providing advice per se, but having good connectivity with maybe some other professionals that can help educate and maybe shape decision making for younger Australians. Good accountants, financial planners, wherever it is, right? So I think you're going to see a bit of that. But wait and watch how many stories come out in a year's time of people who bought a property at 5% and they want to get out and they're in negative equity. It's going to happen.
It pays to know your stuff, pays to keep across it. So we will link that Fast 50 report in the show links. We'll just throw it to a quick break. We'll be back after this. And we're back with Broker Daily Uncut. You mentioned Louis Christopher before. He was in the news for other reasons. There was this whole CBA debacle, the KYC or Know Your Customer protocol. I know the rest of the media were quick to vilify CBA, but I, to be honest, read through it and didn't think they were doing anything that egregious.
Do you KYC Louis Christopher and stop complaining about it?
I had exactly the same scenario with CBA probably a year or 18 months ago, and while it's frustrating and you get annoyed with it all, you know, it's just
absolutely.
It's just the way it is.
The thing is, you've got to look beyond it, and there's a reason why all the KYC stuff's going on. Yes, it's onerous. Yes, it's painful. Yes, you curse and swear, and yes, you get annoyed with the institution that's forcing you to get it done. But the bottom line is, they are forcing you by switching things off to get. You know, it's same as you, Phil. I had the same thing with CBA because I bank with CBA. I have done for decades, and it's annoying at the time. Then you get it done, and you know it's what's required. I would imagine that other institutions are doing similar.
Yeah, it's pretty standard now. But I think what did Louis use the term Orwellian or something?
Orwellian, yeah. That was funny.
You know, it is annoying. Like I can see the frustration because I remember when I went through it. I went, well, you've got all the information. How many loans have I done with you, CBA? You know who I am. I've given you all this information beforehand, umpteen number of times. Why do you need it again from me? Like, you know, there you go. So that's not Louis calling me right now, But like you've got all this. The frustration I had is that I've given you all this information. You know, they want a trust account, trust deeds, and all this. And I went, you've seen it all, CBA. Like how many loans have I done with you? Like, but they go, well, it's a different department. We've got this, that, and you just sit there and you know, you got to remember CBA is a big bureaucratic behemoth.
You also got to remember that CBA, if they don't have this in place, get fined millions and millions and millions and millions and millions of dollars for not having their stuff in order. So look, we can talk all day about inefficiencies, and yes, of course it could be better, and it is frustrating, but it's just the way that things are now.
Well, I don't know what you ran into with your situation. Reading through it, I understand why CBA have to be scrutinous about it. Following AUSTRAC's regulations, I think someone in the comments said that the process just was a bit intense because there was only a couple of days they had to get all the stuff back when fear of getting locked out of all their accounts.
To be fair to CBA, they give you a long time.
Yeah.
And you just ignore, and you go, I don't want to deal with that, don't want to deal with that.
Yeah, they clamp down on you.
Yeah, but again, like sometimes the left hand doesn't talk to the right hand. Like you'll do it in a particular entity, say you've got a self-managed super fund or whatever, and you might have like CDIA accounts, whatever they are. But then, that you've got to do it again for another aspect of your life, right? And I'm sure CBA can improve the process, but they're just doing what's required. You got to remember also the Australian banks are some of the best banks in the world. There's good reasons for it. A lot of it's to do with their governance, to be fair, and maybe this is just part of it. So, I don't want to be bleeding heart flag waver for the banks, but it's the price of doing business these days.
But you'd like to see a bit of consolidation with how they handle information.
Maybe, but like it's so hard. Like to try and get all these things to talk to each other is very, very difficult. And yes, data matching is a lot more effective these days, and their systems are pretty effective. But you speak to most people in a bank, right? They'll still go, we're using software from 20, 30 years ago, right? Green sort of cursive stuff on a green screen type. So it's not that antiquated these days. But, banking technology, I'm not speaking specifically about CBA here, but banking technology, they're still using pretty antiquated systems, right? And to change it's pretty hard. It takes a long time. But hence the reason why they're all focused on digitization these days.
Exactly.
Eventually a robot will just know what to do and sort it all out for us. So.
Eventually a robot will be running this podcast.
Let's hope so. Probably do a better job than this. One of those ones that are going crazy at the moment, fighting everyone. Right? Have you seen them?
No. What are they?
Oh, I don't know. Just robots going nuts.
Like boxing robots.
Oh, they're they're getting too smart for their own good and getting a bit jerky.
Not like those old ones where you hit the thumbs and you punch the head off.
No. Anyway.
All right, well, we're not going anywhere just yet. You have to listen to us for a bit longer until the robots take over. So we'll just throw to a quick break. We'll be back after this. And we're back with Broker Daily Uncut. Bit of comforting news, I suppose, for brokers. Macquarie had their full year results and a 19% growth in home loan books with 94% through the broker channel. So still going strong. No need for this proprietary mania.
Would you call them a nearly there major bank or something?
Yeah, almost major.
Almost major.
Yeah.
I'm sure they like that.
I'm sure they did, yeah. Would you agree? Almost major?
No.
It's like an
The major banks. You're either a major bank or you're not.
Phil?
Well, they're not ADI, right? And I think it's always going to be the thing. That said, though, 94% of flow through the broker channel, like, it's not bad going. It's Macquarie, despite their reluctance, it feels like, to really engage, there's still a lender of choice for a lot of brokers and a lot of Australian borrowers. And another reason why it's a good proposition, but like they just, I don't know if anyone from Macquarie's tuning into this. Like, it's hard to get a hold of them. They don't really put their head above the parapet. They're very, very quiet. They're just steady as you go. They just get down to business, and they're not out trying to court. It feels as though the industry, and does it really matter? It seems it doesn't, because
they get home loans right.
They get home loans right.
And I also bank. I don't bank with Macquarie per se. CBA is my kind of transactional bank, but Macquarie, I've got a number of loans with Macquarie. Their online presence is excellent. Their whole loan infrastructure for a borrower, I don't know what it's like for brokers, but as a borrower, they're pretty good. It would be, and look, I've also got loans with NAB. They're excellent as well. I've had loans with most of the banks, with all of the major banks, and with a lot of the non-banks. Pepper, have been standout, and but Macquarie are good. They're, I think, as a sort of a mainstay. I'm not surprised that they're growing in in their sort of position around loans. They're not they're not a major bank. They never will be a major bank. That's not, what they are. They're an investment bank, but they're doing a good job in home loans.
Yeah, definitely. I mean, we follow the APRA data that comes out every month with the ADI growth, and Macquarie, are always leading the charge. Their growth is like 3 times as much as every other lender out there. So they're going strong. Good to see. Good to see Broker driving it.
They do something right. But do they ever pick up the phone if you call them?
I got onto them for this article, got a statement, but not as vocal as the other banks that I talk to. But it would be good to hear more.
It's just how they do business, right? You can't fault them for it. They don't really owe any real obligation to the broking industry other than potentially providing a good product or service proposition, and it sounds as though they're doing that, right?
Yeah. I again, with Macquarie Bank, I've watched them exit the broker industry once before. I think that there's probably a reason why they keep their cards close to their chest. It's business at the moment. Business through the third-party channel makes a lot of sense for them. They're building a significant loan book. They're doing a good job. They're giving good service to brokers, and they're giving good outcomes to borrowers. Will that always be their strategy? Hey, you know what? Only they know that.
Where's the other 6% come from? How do they originate it?
I don't know. I was wondering that myself. I might have to get on the phone and figure out, because
probably just direct Macquarie staff members go loan straight through, right?
Yeah, you reckon?
Probably.
That's not insider trading, is it?
No, I'm sure they get preferential lending if a lot of the banks do it. They want to provide home loans to their staff. So
yeah,
no worries at all.
Well, it's good to see a bank doing well. Strong growth in home loans and driven by the broker channel. So shout out to all the brokers listening. You're doing well. But that's all we have time for today. Thanks again for listening. If you want to reach more content, brokerdaily.au. If you want to reach me directly, Macquarie. If you want to reach out, editor at brokerdaily.au. We'll chat to you again next week. Cheers.